Ever wondered how a stock with, well, basically no profit suddenly doubles in price overnight, only to then just crash days later? It's a question that plagues a lot of investors, right? Especially in markets like Nepal's. Today, we're taking a deep dive into the complex, often shadowy world of stock market manipulation in Nepal's NEPSE, that's the Nepal Stock Exchange.
Yeah, and our mission today is really to unpack how these market operators, brokers, maybe even regulators are playing behind the scenes, often, at the direct cost of ordinary investors. We want to arm you, the listener, with some crucial insights, help you navigate this environment, understand what's actually going on, and hopefully make much more informed decisions.
And the stakes here, they're incredibly high for people in Nepal. I mean, we're talking about a market where 7.2 million people are involved.
Yeah.
Directly. But here's the really stark reality. An astonishing NPR 15 trillion of common investors' hard-earned money has reportedly just vanished, gone, through these manipulative practices. From an average market cap of NPR 40 trillion, that's not just a number, is it? That's real savings, the dreams of millions of ordinary Nepalis just evaporating.
It's a staggering figure, really is, and it points to some deep systemic vulnerabilities. So let's start by maybe setting the scene a bit, looking at the alarming landscape of Nepal's financial system.
Okay, setting the scene. So what was the journey like for NEPSE in recent years? What drew so many new investors in, especially between, say, 2020 and 2022?
Yeah.
And then what happened?
Well, we saw this incredible boom, a really rapid growth spurt that, it drew in a mass entry of new investors. It seemed like everyone wanted a piece of the action. But then that rapid climb, it was followed by these sudden, sharp crashes, wiped out billions in market capitalization. It was a dizzying ride for many, and often devastating.
And what's truly baffling about that period, and maybe even now, is this paradox of poor performance. You'd expect successful companies to be driving market growth, right? Yet some of these companies were absolutely booming in share price, even when their fundamentals were, let's just say not so great.
That is the core insight here. It's a really stark paradox. Over 26% of the 245 companies listed on NEPSE are actually loss-making. Despite this, some shares trade at these staggering valuations. I mean, reaching as high as NPR 3,200 per share, even when their book values are way down below NPR 100. Take Debiyashwari Hydropower, for instance. Book value as low as NPR 7.33, yet its market price could just soar. This isn't just poor performance, it's a huge red flag. It signals a market where fundamentals are often ignored. And that makes it incredibly susceptible to manipulation.
That really beggars belief. And it wasn't just existing companies either, right? Even new ones like Sarbottam Cement and Sonapur Minerals. They issued IPOs at a premium, promised profits, but then consistently failed to generate them after listing. Their financial health actually got worse. It just makes you wonder how these valuations are even sustainable in any kind of rational market.
Exactly. And this isn't just an isolated issue within the stock market itself. If we connect this to the bigger picture, it really illustrates a wider problem of financial misconduct just permeating Nepal's financial system. I mean, we've seen the cooperative scandal, right? That involves widespread financial misconduct, embezzlement through these cooperative savings and credit institutions. It's become a huge social and political concern, affecting thousands of Nepali citizens, largely due to weak regulatory oversight and, often political influence, too.
And some of those cases are truly immense. Dev Kumar Nepali, the former mayor, accused of embezzling over NPR 2.25 billion from the Image Savings and Credit Cooperative. That's staggering. Think about the impact on the livelihoods of thousands of depositors.
And what's particularly concerning, I think, is the involvement of high-profile individuals, politicians included. Rabi Lamashane, chairman of the Rashtriya Swatantra Party, a former home minister, he was found complicit in cooperative fund embezzlement through Gorkha Media Network, where he was managing director. Funds from cooperatives like Swarnalaxmi, Suryadarshan, Supreme, allegedly misused under his leadership. This just highlights how deep these issues run, eroding public trust at multiple levels.
It certainly paints a picture of a system that seems, ripe for exploitation. So for our listener, maybe let's clarify. What exactly is market manipulation in this context? How would you define it simply?
Right. So market manipulation is basically artificial interference with stock prices or trading volume, simple as that. The whole goal is to create a false impression of demand or supply and ultimately mislead other investors. Those doing it, the operators, they benefit financially, usually at the expense of regular everyday investors who get caught in the fallout.
Okay, so given this vulnerability and the potential for huge gains, What kind of playbook are these manipulators using? Are there common tactics that ordinary investors should really be aware of?
Oh, absolutely. There are several key techniques they deploy, often together. First, there's the classic pump and dump. You've probably heard of it. Operators create hype around a stock, fake orders, rumors, online buzz drive prices up really fast, and then they sell off their own holdings quickly, leaving retail investors holding the bag with substantial losses as the price inevitably crashes. A clear example in any PSE was NFS stock. It just skyrocketed without any real change in its fundamentals. We know insider groups actually coordinated this through Telegram channels, creating artificial demand before dumping their shares.
Okay, pump and dump sounds familiar, unfortunately.
Mhm.
Are there other, maybe less obvious tactics? Things that contribute to this artificial market activity?
Yes, definitely. Another key one is circular trading. This involves coordinated trades among a group of insiders. They basically trade shares back and forth amongst themselves. This creates a false sense of high demand and inflates prices and trading volumes. To an outsider, it looks like there's genuine market interest, but really it's just a closed loop. Then there's spoofing. This is where large, fake buyer-sell orders are placed, sometimes just for milliseconds. The goal is to mislead other investors about supplier demand and manipulate prices. These orders are never meant to be executed. They're just phantoms designed to create a misleading impression before being canceled instantly.
We've talked about tactics creating false signals, but what about leveraging unfair information, like insider trading? How does that play out in MPSE? Have there been prominent cases?
That's a crucial one, yes. And Nepal has definitely seen some high-profile examples. The Sarbottam Cement IPO scandal back in August 2021 is a pretty straightforward case. Top officials at SEBON, that's Nepal's securities board, specifically the chairman Bishmaraj Bungana, and NEPSE's own CEO, Chandra Singh Soud, were found to have allocated IPO shares to their family members, at significantly lower prices, mind you, less than NPR 250 per unit. This was before the public offering, which was valued at NPR 750. Huge difference. There was also a clear conflict of interest involving Global IME Capital, which handled the IPO. It had connections to Chandra Dakal, a SEBON board member whose brother had invested in Sarbottam. Experts at the time called it a straightforward case of insider trading. And something like that severely erodes public trust, right? Because the very people meant to guard the market were seen as profiting unfairly.
Yeah, it's a direct betrayal of trust, especially when it comes from the regulators themselves. So why are these tactics so effective specifically in NEPSE? What is it about this market that makes it so vulnerable?
Well, it really comes down to the market structure itself. NEA PSE is what we call a thin market. It's retail heavy, meaning lots of small investors, and it has relatively low liquidity compared to major global markets. This isn't just a characteristic, it's the fundamental insight into why manipulation thrives there. A few powerful players, maybe with connections, can dramatically sway prices with relatively small transactions. It gives insiders an unfair edge and makes manipulation far easier, frankly, than in larger, more liquid markets. In bigger markets, you'd need immense capital and coordination to move prices like that.
Which inevitably brings us to the regulators themselves. Are they truly watchdogs, or are they, as some people suggest, maybe part of the problem? It feels a bit like we're discussing the foxes guarding the henhouse sometimes.
That raises an extremely important question, doesn't it, about the integrity of these regulatory bodies. A really significant event that starkly highlighted this was the CIAA raid, that's a Commission for the Investigation of Abuse of Authority. They raided SEBON's office back in May 2025. This followed some very serious allegations that SEBON officials were demanding hefty commissions, like 5–7% from hydropower promoters just for IPO approvals.
Commissions just to get an IPO approved.
Yeah.
Well, direct corruption at the heart of the regulatory process. How did this even come to light, and what does it tell us about the broader regulatory environment?
Exactly. Now, SEBON Chairman Santosh Narayan Shrestha denied the claims, of course, but the Independent Power Producers Association, IPPNR, they made these accusations directly. The issue was even raised in Parliament, so it wasn't just whispers. This whole controversy has led to really serious concerns about transparency and credibility in Nepal's capital market regulation. IPPN claims over NPR 24 billion in public investment is stalled because of these alleged delays that directly impacts the economy.
So this sounds less like isolated bad apples and more like systemic issues, wouldn't you say? What are the deeper weaknesses in the regulatory framework that allowed these situations to happen, or at least persist?
You've hit on something crucial there. It does seem systemic. First, there's the outdated legal framework. Nepal is still operating under the Securities Act of 2006. That's nearly 2 decades old. It's simply ill-equipped for modern trading practices. It lacks sophisticated digital oversight tools, real-time surveillance capabilities, and the penalties for contemporary forms of fraud often aren't strong enough deterrents.
So the methods of manipulation have evolved dramatically, especially with technology, but the laws are essentially playing catch-up, constantly behind the curve.
That's it, exactly. The legal framework is always a step behind. Second, there's generally weak enforcement and a significant lack of real autonomy for SEBON. Despite frequent rumors, even strong suspicions of insider trading and price manipulation, very few formal investigations actually lead to convictions. SEBON is constrained. Lack of technical manpower, lack of forensic capabilities, and its independence is often seen as compromised by politically motivated appointments. This means interventions, when they happen, often occur after investors have already suffered losses rather than preventing them.
It's like calling the fire department after the house is already burned down. Not ideal. And what about the exchange itself, NEPSE? Is there an inherent conflict of interest given its dual role?
That's another valid point people raise. NEPSE acts as both a market facilitator and a profit-seeking entity. This dual role can create inherent conflicts. If revenue generation from transaction volume becomes a primary driver, there might be, consciously or unconsciously, less incentive to aggressively curb speculative or manipulative trading. Because paradoxically, that kind of trading often boosts volume. It's a delicate balance, to say the least.
Right. It's easy to point fingers at the manipulators and the regulators, but let's shift perspective for a moment. Let's look at the investors themselves. Why do ordinary people who stand to lose so much fall prey to these schemes? What's the human element here? What makes them vulnerable?
That's a really important angle. A significant factor, often overlooked, is behavioral biases in investing. One very prominent example is herding behavior, the tendency for investors to just follow the crowd, rather than doing their own independent research. This is especially true in a bullish or rising market. A 2022 study specifically on NPSE found this herding behavior was prevalent in bullish trends. It noted investors become risk takers and just follow the crowd during these times. This obviously can lead to mispricing and eventually significant losses for those who jump in late. In fact, an earlier study revealed that a staggering 77% of Nepalese investors admitted buying stocks based purely on others' advice.
Wow, 77%. So instead of doing their homework, they're essentially just jumping on the bandwagon, hoping to ride someone else's wave. That sounds incredibly risky.
Precisely. And this ties directly into another big issue: low financial literacy and, frankly, a speculative mindset among many participants. Many NPSD participants are vulnerable simply because they lack awareness of these manipulation tactics. They often chase quick capital gains, trying to make a fast buck, rather than focusing on a company's long-term fundamental value. And this leads them to invest in potentially loss-making companies with inflated prices, hoping for a quick flip that, well, it rarely materializes for the latecomers.
And it's not just word of mouth or general market sentiment influencing these decisions, is it? There's also this issue you hear about media trapping and biased information being spread around.
Yes, that's absolutely crucial in the modern context. Information asymmetry plays a huge role. Biased or outright false information is circulated, often deliberately. Through social media platforms, Telegram channels are notorious, but also YouTube, Facebook, online forums, often pushed by so-called self-proclaimed experts. This media trapping, as some call it, creates artificial hype or fear. It misleads investors, and it allows the manipulators to offload their shares at peak prices, leaving unsuspecting investors holding worthless stock when prices inevitably correct. It's a modern digital twist on an old con game.
Okay, so knowing all this, the landscape, the tactics, the regulatory weaknesses, and even the human psychological element, what does this mean for charting a course forward? How can Nepal build a healthier, more trustworthy market for its citizens? Where do we even start?
Well, rebuilding trust and integrity has to be paramount. That's the foundation. While NEPSE undoubtedly has immense potential for growth, it really needs fundamental changes. Changes to enhance transparency, investor education, and critically robust governance. It's definitely a multi-pronged approach that's needed.
Okay, so what specifically needs to happen on the policy and regulatory front to get there? What are the concrete steps?
Right, concrete steps. First, we absolutely need to advocate for modernizing Nepal's capital market laws, urgently. This means implementing things like AI-based fraud detection systems, real-time surveillance tools, and maybe more transparent circuit breaker mechanisms to prevent those rapid, unchecked price swings that manipulators thrive on. Second, SEBON, the regulator, needs to be granted full autonomy, real independence, and critically, it needs forensic capabilities, proper tools, and skilled people. This would enable stricter, more proactive audits, more effective detection of manipulation before it causes widespread harm. And importantly, robust penalties for unethical practices. We need to move beyond just reacting after investors have already lost money.
Makes sense. So strengthen the rules and the referee. But beyond the regulations and the institutions, how can we empower the investors themselves, the very people most impacted by these schemes?
Investor empowerment through education is absolutely critical. Cannot stress that enough. There's a strong, urgent need for comprehensive investor education programs, particularly targeting youth and new retail traders who are often the most vulnerable. These programs should equip investors to recognize the signs of manipulation, understand risk, and make informed decisions based on facts, not hype. Advise them to always source information from reliable news channels and, crucially, verify authenticity before acting on anything they hear or read online.
So practical, actionable advice for the everyday person looking to invest. What are some of those nuts and bolts? What should they be doing?
Exactly, nuts and bolts. We need to encourage investors, first off, to avoid that herd mentality. Don't just follow the crowd. Second, diversify your portfolio across different sectors. Don't put all your eggs in one basket, especially not just banking and finance, which dominate any PSE. Third, exercise patience. Avoid impulsive trading based on rumors or short-term swings. Investing should be long-term. Fourth, and this is key, conduct thorough research. Look into a company's financial health, its management team, its growth potential before investing a single rupee. And one more crucial piece of personal financial advice, always ensure you have emergency savings set aside first, like maybe 6 months of living expenses before you even think about investing in the stock market. That provides a vital safety net.
That's really solid advice. And finally, what about the market structure itself? How can any PSE evolve to be more resilient and fairer overall?
Market diversification and transparency are key there. We should actively encourage the listing of companies from various sectors, tech, manufacturing, tourism, agriculture, beyond just banking and finance. This would reduce concentration risk, provide more liquidity overall, and offer more diverse investment opportunities. It creates a more balanced, resilient market. And equally important, establish truly transparent disclosure platforms for company financials, for insider trades, for large bulk share movements. This helps level the playing field for all investors, big and small.
You know, this deep dive has really shown us that stock market manipulation isn't just some technical issue buried in finance jargon. It's a much deeper human challenge, isn't it?
Yeah.
Rooted in things like greed, trust, and accountability. And PSE certainly has immense potential for growth, but it clearly needs a profound evolution. One driven by transparency, education, and much more